Well, markets have shrugged off the impact of a partial government shutdown. We've had positive US manufacturing data, while gold is at its lowest level in 7 weeks. Now we're joined by Mark Newton of Grey Wolf Execution. Mark, what's behind the positive tone in markets today? Is there anything more to it than the start of a new month and the belief perhaps that this shutdown may prove to be short-lived?
Personally, I think it touches on really your first point, in that it's the beginning of a new month. We're seeing inflows, you see positive seasonality whenever you start a new month. But the markets are in a little bit of a denial stage in terms of about the shutdown. They're certainly not rallying because of the government shutdown. If anything, we've seen historically that markets rally after governments reopen after shutdowns, not when they first begin. So the fact that the two sides are so far apart and there's still ongoing wrangling means that this could last a lot longer than people expect, which would be reminiscent of the late 70s, like in 76, 77, 78, when shutdowns lasted 8 to 10 days. Markets certainly didn't do well in those periods, and if you look now, they're estimating it could cost potentially up to $300 million a day, or up to almost 15 basis points in terms of GDP growth per week that the market might be shut down. So that's certainly not good news, but I think, for the time being, it's nice to see a bounce. The markets have been down 7 out of the last 8 days. The trend is still very much negative in the short run, so a lot of people are viewing this bounce with a little bit of skepticism and thinking you probably sell into it and not thinking it has a whole lot of sustainability.
Okay, now gold has lost about 3% today, about 23% so far this year. I think it's on track for its first annual loss since about the year 2000. Are there particular supply-demand dynamics which are contributing to those losses?
Well, the Indian Prime Minister came out and they talked about the imports for gold were drastically below what they'd seen in the second quarter, and they came in roughly about 53 tons versus prior in the quarter. In Q2, it was a little bit over 300. So it's a big pullback in terms of imports for gold. And it's important because India typically consumes about 20% of the gold. They typically are a big importer of gold, and historically this time of year, gold rallies oftentimes because of Indian demand ahead of the wedding season. And so to see that there's a drastic cutback in imports, and we've talked before about the fact that their deficits have gotten out of control, and that caused the rupee to hit record lows. And so this is all part of the government's initiative to try to rein in the deficit, which has worked, I think, over the last few months. You have seen imports under control, but for gold, I think that number came as a bit of a shock. And so now we're testing this 1280 level, and technically we've been under pressure. If you look at gold in multi-currencies, we're actually hitting new lows. So the trend continues to be bearish in gold. According to what India said today, they expect that there's going to be ongoing contraction in imports for gold, which if if there's any sort of correlation between that and the price movement, means that we're probably likely to see additional pullbacks in gold in the near term.
Okay, and you've spoken about the potential for a correction or consolidation for a while. Even though we are up today, we have been down for, I think, at least the past week and a half.
Right.
Have we seen the last of the strong gains for a while? Are we entering a period where markets are going to trend sideways now?
Well, the Dow certainly has been trending sideways since May. I mean, we're underneath the highs in the Dow, and the S&P's been in a very similar boat, and it's down 7 out of 8 days. But the NASDAQ is what's interesting, because that's at new highs today, and the NASDAQ Composite really the highest level of 2013, the Russell 2000. So certainly a lot of resilience there. Oftentimes you want to see signs, if you're a bear, that the small caps and the NASDAQ start to break, and that can typically lead the other markets down, and that certainly hasn't happened. My thinking is we're still in for a rough patch in October. Sentiment is still very optimistic with regards to the overall market and the fact that the Fed can step in and likely won't taper, particularly with the government being shut down. We're not even going to hear the economic reports potentially on Friday, so any news that might come to bolster thoughts of tapering sooner potentially might not happen at all. So my thinking is momentum is still quite negative with regards to the short term and intermediate term. You look at common technical indicators, they're still pointed negative. Sentiment is optimistic, and we're still seasonally in a rough patch. So most traders that I speak with are using rallies to sell into, thinking we can see further pullbacks down to challenge, if not break, August lows, and that selling could persist through October before you see any sort of bounce into any type of year-end rally.
Okay, well, there you have it. Despite the challenges out there, parts of the market are showing resilience. That was Mark Newton. Grey Wolf Execution Partners, and I'm Jane Searle for The Deal.